Testing. All right. Good morning, everyone. It's me, Calvin. So today I'm not going to show my face, okay? And Happy New Year to every one of you. And today will be our first live stream for 2023. So same old thing. We're gonna find any of the stocks in the morning. Before the markets open, see whether they fulfill whatever we want or not. Okay, so in the meantime, okay, in between the whole live stream, so if let's say you have any questions or any stocks that you find that is okay and then want me to look into it, then do let me know. Okay, so in the meantime, I'll just look into the TO. So this is theoretical opening, the theoretical most active list. So usually I find stocks from here to know that those stocks that they mark up when the market open, whether they will continue to push the price up higher. All right. So for those of you who are just watch this or just know about us, then this is something that it will interest you. You can watch some of the old recordings of ours and then to understand a little bit better on how this whole thing works. All right. So the first page here we have nothing. So let's look into the next one. Let's see. So this one actually have fulfill. Oh, it doesn't fulfill my rules. Basically, my rules is that I need to look into TO volume and then compare it with the best sell, and then also look at the TO change, make sure it's not too much or gap up too much today. If let's say moving up too much, that means that the big boys, they won't have the intention to continue to mark it up higher. So the whole idea of this before the market open and then after the market open, the price starts to mark up higher is because usually these are the stocks that the big boys that they want to push, do a final push, to mark the price up higher to attract the retail investors to come in. So that on the same day, they will not maintain at the high side, they start throwing the price down. So we are going to take advantage of the sudden price surge when the markets open. So you might not be able to make a lot out from it, but given the time that once the market is open, then within a few minutes, and then you can grab maybe a couple of hundreds of ringgit. That is actually okay because it's only a few minutes of work. All right. So other than that, of course, when we look into it, we need to refer back to the charts is because we need to see same old thing, whether to see the big boys have the intention to mark the price up higher to attract more buyers to come in. Like example, things like this is like the price already mark up higher. So yesterday, but it pressed it back down. So basically the big boys are selling the day before. The best one is you want to see them, they are not selling yet. So this actually show the sign that they are not going to maintain the price at the high side. So we are not going to, they are not going to continue to mark it up high, even though it fulfills all the things that we want. So this method is only one of the method we use to look into the stock market, because there are a lot more way. For example, if let's say the market has been going down for a lot, or like last year everything that is going down, then there won't be any of stocks that they are attracting buyers. Okay, so why they are doing this to attract buyers, basically a lot of retail investor, every one of us, we like to see, whoa, price moving up higher, then we got the confidence, then you start to jump into it. So that's the thing. Okay, that's how the big boys in the market are always trapping the retail investor. But the retail investor, we always leave behind that something that the big boys don't want you to know, but I'm sharing this out to every one of you so that you know about this. Hopefully it can help you guys. All right, and of course I have a webinar that is coming up on Wednesday and Friday and Sunday. So how you can apply the most applicable our way of analysis into the stock market, into KLSE. So it's totally whole different things that you don't learn from, you don't learn from the traditional technical analysis or the things that they don't show you in the fundamental side. What was the stuff I was looking at just now again? Okay. So that's how we can do it. If you have been following us, I don't have to say much. Basically, you know that every of our entry, the bottom, finding the bottom, everything is actually very precise. This one, they're starting to press it down, but they might continue to mark the price up higher. So all right, I'm just gonna put this into the favorite list. Did I put the wrong one? Oh, okay, I put the wrong one. Where is it? Never mind. It'll appear later on. So yeah, same thing. Okay, if you like our sharing, feel free to give us a like, so that as a form of support to every one of us. All right. Okay, we have Facebook side, everything is okay. Right, YouTube side is okay. So in the meantime, I wouldn't look into the comment that much. But of course, if let's say there are any of the X date, like their entitlement date, avoid looking at it, because that's where they do the adjustment. But of course, sometimes if it's they want to, after the entitlement date, then they will start to mark the price up higher, you know, after they done the adjustment. Okay, so I have seen those that is in the gap up. I want to check those that is not gap up. Wait, I see something that it might be interesting. This is interesting. I'll just add this into my favorite. For those of my students, if you have watching this, then you know what I mean. Yeah, I mean, it's not something that I can explain it. I can actually explain it, but it's something that I need to do the practice together with you, hands-on, every day, look into it, repeating the same thing. So it's about practice. Okay, trading is about practice. It's whether you're going for day trade or maybe you're going for short-term trade, long-term trade. But of course, long-term trade wise or long-term investment wise, you don't get to practice that much. So I don't know. For my point of view is, you know, some people, they always say like, oh, don't be too risky, don't go for short term, okay, or don't be more low risk, so whole long term is the best and things like that. I don't go against that. The reason is because this, whether long term or short term, is just a method of you trading in the stock market, right? So it's like some of you prefer to take a flight, so it's a faster way to reach to another country, but some of you prefer to, you know, drive there, having a caravan. Some of you prefer to have taking the train. So it's just a form of vehicle, investment vehicle, or it's not investment vehicle, investment method. Ultimately, end of the day, you just want to make the capital gain. It's not because you are looking at the dividend. Dividend is a plus, additional. All right. So don't try to say like short term is more risky, day trading is more risky. If let's say like last year everything is down, right? Everything is down, so you are going in since the beginning of the year, going in for long term. Definitely you are holding on to the losses, making losses. So, but most of us, we don't face the fact. We don't want to face the fact that we are losing money, so that we convince ourselves, okay, hold long term, there's no problem. So it's about timing. whether you are in at the right timing. Whether short term, long term, same thing. Okay, yesterday I just went out with a few friends of mine. We say the same thing. Even he said the same thing. He told us, okay, properties, whether buying properties is really good. Yes, it's good if let's say you are in the right timing, at the timing where most of the property prices are moving up, but right now you can see everything is very slow. So it's about timing. So if you are in the right timing, you can get the valuation increase. If you're in the wrong timing, then you have to hold on to it and then keep servicing the loan and keep looking at why the price is not moving up higher every day. Oh my God, why other people are looking the stocks that they are looking at it is moving up every day. So there's a lot of why this and why that. But at the end of the day is whether you're in the right timing, whether your current analysis can tell you the timing that they want to move up or not. Okay, so that's very important. You have to ask yourself, okay, it's about practice. Trading, of course, a little bit of luck, but it's not totally luck. At least in trading wise, you for my own kind of analysis is that I see the transaction data. I see whether the big boys want to move up higher or going down lower, or whether they want to throw the price down lower. So you can follow that. If let's say they want to throw down lower, then quickly get out from it. So you need to ask yourself whether when you look into the stock market, can you know whether the price is going down or not, or the price is down, then only you know. So that is a very important question that you need to ask yourself. So if you can't tell whether it's moving up or down, maybe the next day or maybe the next couple of days, or whether the big boys are going to do this, then basically you have to improve that. So you can't say because the market is bad, so that's why you have no chance to make profit from the market, or because the market is bad, so that you have losses. It's easy way to blame something than realize our failure. Okay, accepting our failure. All right. So market is going to start. I know there's a lot of lifetime lesson and things like that, but you can go to our trading view and see like the things that we said in trading view. You can see bottom. We say bottom, then it's bottom. Hello, good morning, Leo. How's everyone 2023? Okay, 4 more minutes to market open. Thanks for joining in to my live stream. So I've usually the last 5 minutes you should have screen out the stocks that you want to focus on to it. For what I see so far, that if let's say during the day whether they want to whether the price is going to mark up higher after the price open, usually are those 1 ringgit and above. The reason why is because let's say each price movement is 1 tick. So for 1 ringgit and above, 1 tick is 1 cent. So you can see this one here is 1 cent. Moving up like 2.06, okay, moving up 1 cent. And then let's say for this one is a penny stock, moving up 1 tick is only half cent. So this ringgit stock, it might move up like 3 ticks. 3 ticks wise, maybe like 3 cents. So if you're buying 100 lots, you're making 100 then. Okay, so if you ask me, I prefer to go for those like ringgit stock. I know it's more expensive. A lot of people in the market, they always think that, oh my God, so expensive, I can buy lesser, means I make lesser money. No, my way of risk management and position sizing is that regardless of how much is it, I will buy the same amount of lot size. The reason is because your profit and loss, whether you gain or whether you lose money, if you are buying 100 lots, move up one tick, 1 cent, not one tick in this way, move up 1 cent, that means that you are making 100 ringgit. Move up 2 cents, 200. Move down 1 cent, you're losing 100. So it doesn't matter the value. The value, total value of you invest into this it doesn't go back that way. It depends on your position sizing, how many lots that you are buying. Okay. So that's one thing that a lot of people I mean even for myself last time also, I do the position sizing in the sense of, let's say I have a total capital of maybe like 20,000 or maybe 40,000. I want to buy 4 stocks each time, so 10,000 for each of the stocks, regardless of what price is it. So if let's say 1 ringgit stock for 10,000, then 100 lots. If let's say 10 cents stocks for 10,000 ringgit, then I'll be buying 1,000 lot. So if let's say once this 10 cent stock, it goes down half cent, 1 cent, sorry, goes down 1 cent, I'm losing 1,000 ringgit. But if the 1 ringgit stock move up 1 cent, I'm going to make 100 ringgit only. So it cannot offset. So which means that every time losing more, and then the one that moving up need to move up 10 times to chase 1 tick of price losses in the 10 cent stocks. So that's why the position sizing, the amount of lot size you enter, depends on that. If you don't overexpose the risk into a penny stocks, right? Okay, so right now we're about to start. I just need to prepare a bit for that one. So how we look into this, so this is the buy sell queue here, and then this one need to pull down a bit. I need the code movement. The reason why I need the code movement here is because I need to see every time. Oh my god, market is starting. Okay. 206 is the opening price. Okay, I need this code movement here is because I can see whether the transaction, how the transaction is like. Every time the big boys, when they move a different transaction, then it will tell us a different thing. Okay, whether they want to mark the price up higher. So you can see, once they really have the intention to mark the price up higher, you can see they would clear 207. Just now 207 was about 200 over lots. They clear it all within the same second. But right now you can see they left 3 lots there, and then they take 207 again, take 207 again. So 207 is jumped to the sell side. So if they are buying this low every few seconds, then we have to be careful. Okay, it means that they have not much of intention to mark it up higher. TO change is 2 cents up. 206. How we get the price at 206? Be 5 seconds before the market open, you need to key in. Let's say you want to sell at the best price, or you want to buy at the best best sell price. So you need to queue at the slightly higher than the best buy price before the market open. Okay, before the market open, you need to queue that. So once the market open 5 seconds before, why we need to wait for 5 seconds before is because we want to avoid any of them, they pull off the volume, pull off the theoretical volume. So before opening, they pull off, so you won't get trapped into it. So 5 seconds before, to avoid they cancel the orders, cancel the volume. Then another reason is because so that you enter at the last 5 seconds, so no one will come in and disturb you, so you can get the TO price better. right? So we can see, I'm not sure whether you understand that, but you can go to our website or our blog, you can read about it, and also we have videos relating to this. Go look into our day trading videos, then probably you'll understand a little bit more better if you are new to this, right? Okay, so far we can see 207 was jumped to the buy side, but they never refilled, so I don't think they have much of the intention to mark the price up higher. So in this case, you might need to break even and get out from here. Because they're doing ding dong, ding dong, ding dong, ding dong, but never refill the buy side. Because right now you can still break even is because 206 is at the buy side. So usually when we enter for day trading or whatever trading wise, we straight away take the price that we currently can match the order. I know there's a lot of people like to queue at the buy side. So you don't queue at the buy side. It's because if you wait for someone to throw it down to you, then it's queue to at the sell side. Wait for someone to clear your orders. Then because the big boys, once they hit a certain point, they straight away throw the price down. They won't wait for you and wait. Say like, okay, I kasihan you. Okay, I take your orders. They don't kasihan you. They don't know you. You are sitting behind the monitor and they don't know you. You don't know them. So once you see there are signs that they have no intention to mark up, quickly just get out. Break even, also get out. Cut loss, also get out. Okay, so you can see they keep on reviewing this. Right, so I think this one wise, just come back later on and see how it goes. Okay, so I have to break even and get out. So at least right now, if we get up at 206, then you just be losing the brokerage fees. That's it, right? Okay, so that's here for today. They're not moving anywhere. 207 to refill. You can see they keep on 207, jump to the buy side and then jump back to the sell side. They keep on clearing and clearing and clearing. It's not a good thing. Okay, so this stocks, we're not looking back into it. Oh, refill back to about 128, but it's still not enough. They need to go back to about like 200 plus. Throwing down. So if you can see here that is if let's say 100 lots is enough for you to get out. Just now it was 100 lots, 100 plus. Enough for you to get out, you can quickly throw it down. Or else you have to break even and get out. Okay, so that's how we do day trade. So it's not that stressful. I know maybe some of you will see it like, wow, it's like, you know, everything happens so fast and things like that, but practice, same thing. If you do a practice, then it's good. This 1000 over here, if they, I always afraid of this sudden huge volume at one buy price. And a lot of retail investors would think that this is a support. This is actually not a support. These are just orders that is filled, sent in by the big boys, so that you would think this is the support, but in actual fact, it's not a support because they can cancel this order anytime. So I have to be very careful about this. All right. So I'm not going to look into this right now because I've been out from there. So if let's say you haven't, let's say now it's 206, it's fine. So usually if I do day trade, I'll just do it in the morning because I find Malaysian market that's pointless for us to sit there for 9 to 5 and then look for opportunity. Unless you have a very huge volume, huge capital, keep on doing in and out, in and out, in and out for every few cents, like the proprietary day trader, then you can do so. Or else, I think, yeah, no point for you to sit whole day from there. But of course, there are ways, if let's say you really want to look for a spot for daily trades, then you can look into that, right? So far, market, everything is all right. Very low, not much of the stocks traded. Okay, so today, 2023, first day of trade, first day of live stream to show how the day trading works. So I hope some of you understand how it works. If let's say do not know, look back into some of our videos. So take a look into it and see how it goes, how we can see the big boys whether they want to mark the price up or they want to throw the price down. Today, unfortunately, I can't enter into it because I was looking at the things setting up and then things like that. But never mind, we're gonna see it next week again. Okay, so yep, thank you very much for joining, and I will see you next week. And remember, we have our webinar is coming. So if you are interested to learn more about this, register it in our Facebook and also in our website. All right, and remember, give us a like and subscribe to our YouTube channel, and I will see you next week, same time on Monday, maybe same time. So that's why you need to subscribe to us and then know when is the next live stream coming. All right, thank you, bye bye.